Good afternoon, everyone, and welcome. Welcome to Financial Wellness First Wednesday. We are so thankful to have you with us today. We have a really special presentation. I know you're going to enjoy it. I know you're going to learn a lot. Let's go ahead and get started. Today's presentation is Car Buying, How to Navigate Through the Process. And we are so pleased to have Andy Gill. He's our Senior Consumer Loan Officer from First Financial Federal Credit Union. Welcome, Andy.
Hi, how you doing, Joan? And hello, everybody. Thanks for joining us today.
Thank you. Tell us a little bit about yourself.
Well, I've been with Credit Union now for a little over 8 years. I've been in lending for a little over 7 years, and then I'm coming up on 3 years that I'll actually be with our loan call center now. So I love lending.
That's so great. And this is just a perfect time to be talking about this because we know we've got a lot of pent-up demand out there, yours truly included. And we want to be that early bird that gets the worm. When we want to be all ready to go when things start to open up again and we all are out there looking for our new cars. So with that said, let me say a couple of housekeeping things. Again, our participants, thank you so much for being with us. We really appreciate it. We're going to keep your cameras and your mics off and offer you opportunity to ask questions of Andy in our chat. So just put your message in the chat. You can, if you want to put it in the entire chat, you can do that. I'm Joan Pugh. I'm with First Financial Federal Credit Union moderating today. You can certainly send that to me privately because there are going to be episodes here where Andy's going to take some questions. Having said that, let's go ahead and get started. Off to you, Andy.
Thank you, Joan. So today we're going to go over what you can afford, some additional costs that come with purchasing a vehicle, actually getting your financing, choosing the right car, things to think about before you actually get the keys, whether you want to go new or used, actually making that purchase, and then a whole bunch of tips along the way to help you out. So starting right off, how much can you afford? A good starting place is about 10% of your gross monthly income. Now that's your before tax income. So you take your hours you work each week, multiply it by your hourly rate, times 52 for the amount of weeks in a year, divide it by 12. In this case, we have $2,600 as our gross monthly income. So about 10% of that, you're looking at about a $260 a month car payment. That's what you'd be looking at of what you could afford. Some other things to think about is looking at your personal budget. Everyone's situation is different. How much can you afford to spend on your monthly car payment? How long do you want to have that loan payment for? Longer terms can usually get you a smaller car payment, but it increases the total amount of interest that you pay back over the life of that loan. And then the total cost of the vehicle is not just the purchase price that you're buying it for. So some of those additional costs, it's going to be your tax, tag, title, and dealer fees. These all get added to what you actually have to purchase your vehicle for, and they're all required. So in the example here, we have a $15,000 car. If that's the price that you've agreed upon to buy it, after you factor in 6% sales tax, your tag and title fees, plus that dealer processing fee, it could be closer to $17,000 you have to spend on that car. Another thing to look at is your insurance costs. These can all range to pay based on the age of the driver, your driving record, what year, make, and model you're choosing. A Corvette's going to be a lot more expensive to insure than a Honda Civic. Where you live and how many miles you drive. Get a quote on your insurance before you actually purchase the vehicle so you know how much additional per month you'll have to pay to insure that car. Some other costs that you're going to have to look at, your registration renewals and emissions every couple years, mandatory. Your gas, your fuel costs, oil changes and your routine maintenance, brakes and tires and other wear and tear items, plus the unexpected repairs or breakdowns that can be quite costly at times. So just looking at these rough costs, these are all guaranteed you're going to have to pay for when you own the car. Your insurance, about $150 a month on average. Like I said, this can range based on the factors on the earlier slide. Your oil changes, about $75 every 5,000 miles. To make your car last, you got to get that regular maintenance. Registration renewals, depending on what type of car it is, every 2 years, potentially even higher. Gas, potentially $30, $40 a tank, and that's based on $2.50 a gallon. That'll fluctuate as the gas prices go up or down. And then brakes and tires. These are hundreds of dollars. They don't come up as often, but it's only a matter of time before they do. Brakes and tires do not last. They will be needed to be replaced.
All right, Andy, that's great information. You seem to be doing a great job because we don't have any questions yet, but actually I have a question. I know sometimes it's a beautiful summer day and we're out and about, and it's like, oh, let's just go and see what's out there, and you fall in love with the vehicle. What do you think about that kind of spontaneous vehicle purchase?
While spontaneously finding a vehicle can be good sometimes, you need to really have some planning done in advance to make sure you're actually going to be getting a good price on that car or buying what you truly need. So even if you want to spontaneously look around, do your research. It's always important to know what you're going in to buy before you actually buy it. So part of that research that I just mentioned is looking at financing. Like, how are you going to finance it? Where? What are you going to include? You need some help. So first and foremost, First Financial. Come to us. We can look to see what we can do to help you out. Other financial institutions, of course, offer financing, and some dealerships even offer their own financing. First Financial is a fiduciary, and while each member's situation is different, we cannot lend to everyone. We do our best to lend across the credit spectrum. Some things we look at in qualifying for a loan, some of the criteria: your credit history, what's your credit score, what's your payment history like, your capacity to pay back the loan, what's your monthly debt to income ratio. Essentially, can you afford this? What's the character, your length of employment, how long have you resided at your current address, and also the collateral, the actual vehicle itself that you're going to be looking to purchase. It's a secured loan. We got to know what that car is worth. So if you do get approved, your credit score, the term, the length of the loan, and the vehicle loan to value determines your interest rate. So what's loan to value? This is essentially the percentage of the financing versus what the vehicle you're buying is worth. So in the example we have listed here, I'm going back to that $15,000 car, and then after we roll in all the required fees we have to pay at the dealership, we're closer to $17,000. So we just divide 17 by 15. It's about 113% loan to value. So what that means is you are 13% more, you owe more on that car than what it's worth. Now, why is loan to value important? It can be a reason a loan gets turned down. If a loan to value is too high, it could potentially not be able to be used as collateral to do a loan. Other reasons could be if you consistently make late payments, that's your payment history on your credit, not being able to afford the additional debt, like not being able to afford that new monthly payment. If you've had bankruptcy or filing for bankruptcy, having a property repossessed or foreclosure, or also collections. So actually having a court order requiring a debtor to pay money to the creditor. So when I say auto loan, that car or auto loan, that means financing the vehicle. The car is used as collateral. It's considered a secured loan, and you as the owner give up the right to that collateral until it's paid back. And if it's not paid back as agreed, then that's considered a repossession. So with the auto loan, the lender would hold on to the lien. Maryland is a two-part title state. There's the blue and the red copy. The blue is the actual physical title, and the red is the lien or the security interest filing statement. Once the loan is paid in full, the lender would then release that SIF or the lien to you as the owner, and having both of the lien release plus the title is a clear vehicle or is a clear title for your car. You cannot sell a vehicle to someone without a clear title. It's important to know what your total cost of what this vehicle is going to be. That total cost isn't just that price that you're paying at the dealership. That goes into all your interest that you're going to end up paying over the loan as well. That's based on by your annual percentage rate and the length of the loan. Like I mentioned earlier, the longer the loan, the smaller the payment, but usually the higher the rate and the higher the total cost. So it's not just about your monthly payment. You got to look at what this vehicle is costing you total. So taking a look at some financing comparisons here, I did this chart on a $20,000 loan. So we got 5 different loan options, 2 of which are rates that First Financial offers, and we have different rates and terms. And you can take a look at your different monthly payments kind of across the board. But what I really want you to focus on here is the total interest down at the bottom. That's the finance cost of actually having that loan. So even though the monthly payments may be comparable, the actual cost of the loan itself is really where you spend all your money. So just as a quick look, just the difference between loan number 2 and loan number 4 is over $3,800 difference, and that's just in interest. And then the difference between 3 and 5, just over $2,600. So that total interest is a really, really, really good thing to look at. You don't want to be spending too much on the vehicle over the long term. Now, something that can help this is a down payment. So let's look at the impact of what a down payment can do. So this is that same $20,000 loan, but now we're putting $2,000 down. So you're only going to be financing $18,000. Look at the total interest. Look at the change on it. Again, you're still saving a lot of money based on your interest rate, but that down payment can really, really help cut down your total cost of that vehicle over the life of the loan, plus lower your monthly payment a little bit. So why make a down payment? It shows planning and commitment to the vehicle. So it shows the underwriters, if you're willing to have that down payment, that you've thought about this, you've saved up for it, and you have an immediate vested interest in this car. It helps lower that loan to value that we brought up earlier, so you're not necessarily owing more than the car is worth. And it can also save you money in the long term.
That's all really good information, Andy. I think when you actually see the numbers and you see the dollar amount that you're saving, it really underscores what you're saying about shopping around for the best deal. So I know that you really addressed this, but I've got a bottom line question that came through the chat. How long should I finance my car for? I mean, what would you share with a member who asked you that question?
That really all depends on your personal situation. So if you're looking at buying a vehicle for the long term, where you want to keep this car for 10 years, maybe trying to do a shorter term isn't necessarily the best thing for you to make your payment higher. If you're looking to have a vehicle just for a short period of time, a couple years before trading it in, it really comes down to then what your monthly payment is versus what your interest rate. It's all going to change. It's a hard question to answer because everyone's situation is unique. And that's something that when you actually speak with us at First Financial, one of our loan originators, we can help talk through that process, go through, what your budget's like, what you can afford, and how often you want to be making that payment for or how long.
Right. And Andy, you mentioned the fact that we are a fiduciary, and I don't know if folks really know what that means. A fiduciary is a financial institution or person that's putting the member, the consumer first, above the organization. And so being a fiduciary means we're always going to do the very best that we possibly can for the member. And certainly, I think that's a great value of credit union membership.
Oh, absolutely. And that's all of our originators in our loan call center. We're here to help you throughout the process. We want to help you get the best deal and the best loan to help you with that car.
I know. That's so awesome. Thank you. Okay, looks like we're okay with the questions. Keep them coming in the chat, and we'll keep going with Andy.
All right. So we've talked about the financing piece. Now it's time to buy. Biggest thing here is choosing the right car for you. And I say for you because everyone's needs in a vehicle are different. No one has the same two needs on a car, whether you need a four-door sedan, a SUV with a hatch, maybe a pickup. We're in Maryland. We just got snow. You need four-wheel or all-wheel drive possibly. So look at what you actually need in the vehicle, and then that can help start to get the process of where to look and what to look for. Check out the different ratings on different vehicles of that same type. Check their quality, their safety. Are they reliable? If it's not a reliable car, it's going to cost you more money. Miles per gallon, that fuel cost we talked about, the better your miles per gallon, the cheaper your fuel will be over the life. What color, what options, or what accessories do you want? These are more on the optional side. These are things you want, not necessarily need, but still they're important. If you're not going to be happy with a silver car, don't buy a silver car. So rank all the features that you need in order of how important they are to you. So that way, when you're looking for your vehicle, you know what you can potentially agree to forego or you absolutely need in a car. Do your research. You're going to hear me say this a lot. It is important to do your research when buying a vehicle. If you're trading in a car, know your car's value. Know what it's worth, so that way when the dealership makes you an offer, you know if it's a fair offer or not. Kelley Blue Book is the consumer resource for car. Use your VIN and your mileage, and you can look up what your car is worth. Dealerships, they usually go off what's called NADA or even an auction value when making an offer. It's most likely going to be lower than what your car is actually worth, but still you want to know if they're making you a fair offer. Something else to consider is a car buying service such as TrueCar. First Financial has a partnership with them. You can check out our website, and we have that on a resource here later as part of the tips. This is a way that you can make sure you're not overpaying for a vehicle, especially if you're shopping new. And narrow down your choices to several cars, maybe different makes or models. Really don't just make that spontaneous decision. Do your research. Some other things, research, like I said, those various models. See if there are any incentives or rebates on them. Some manufacturers will give more of an incentive to buy their vehicle than others. That could help save you some money. Shop at various dealerships. Look around. Don't just go to one dealership and say, that's the car, I'm buying it. See what you can get that same car at another dealership for cheaper. One thing to really focus on is the invoice price, not the MSRP. MSRP is the manufacturer suggested retail price. So that's what Ford tells the dealership that car should be sold for. That's not what Ford bought it for. The invoice price is what the dealership paid. That's what you need to focus on. You won't be able to get a car cheaper than invoice, but you don't want to pay MSRP. Haggle the price, know your margins, and if you've done your research, you can kind of see what other people have paid for that similar vehicle and can negotiate with the dealership. Looking at best times to buy. I know everyone's heard of the incentive periods, meaning the employee pricings for all, or even the President's Day sales event. There's always those going on. Really good times to buy at a car dealership because they're willing to cut down that MSRP price and get closer to the invoice. End of the month, if the dealership's trying to meet a monthly obligation or a monthly goal, they might be more willing to cut you a deal on a vehicle just to sell it. Middle of the week, if it's been a slow day and the dealership just wants to sell a car, now being at the start of 2021, dealerships want to get rid of their inventory of 2020 vehicles. They're going to cut deals on them. So a couple different advantages here between buying new and buying used. One of the biggest things I will say to look at is how long do you plan to own this vehicle? If you want this car for 10, 15 years, it might be in your best interest to buy new. That way you know you're not buying anything with a potential problem. It's going to last you a long time, and if you take care of it and do your regular maintenance, you can probably get 10 years out of the car, if not more. If you're only looking to have a vehicle for a few years, maybe a used is your better choice. You can usually get a better deal on them sometimes, can save you, in this case, 30, 40% over a new car potentially. So there are advantages to new versus used depending on what your personal situation is. There's also the difference between a private party versus a dealer purchase. Now, with a private party, there are always risks involved. This is not buying from an actual licensed dealership. This would be buying from someone. I'm sure you've seen advertisements on maybe Craigslist or in the newspaper. Some of the disadvantages here are there's no potential for a warranty. You need to make sure you have financing lined up in advance. You're in charge of processing all the title work, and the vehicle also does need to be inspected. Whereas with a dealership, most times they offer at least some sort of a complimentary warranty or an aftermarket warranty. The dealership takes care of processing all your documentation, and they've already completed the inspection. Plus, they can even potentially provide you on-the-spot financing as well. If you decide used car is the right thing for you, here's a couple things to think about. Make an appointment to see that car and take someone with you, someone that maybe knows vehicles or just someone to help look over the car with you, a second set of eyes. Don't be afraid to get dirty. Check out the car. It's a used car. Someone else has owned this before. You don't know necessarily what you're buying. You'd like to think that a dealership will sell you a reputable car, but you need to check it yourself just to be sure. If everything looks okay, it comes down to the test drive. So on the test drive, look over and drive over some rough terrain, some rough pavement. See if anything rattles or makes an unusual noise. Check the steering. Is it responsive? Brake. See if the brakes feel good. Make sure all your lights, signals, wipers, and electronics, your radio, make sure it all works. And then make note of the mileage to make sure odometer's clicking as well. These are all things that if buying from a dealership, if you notice something's not working, you can negotiate to have the price lowered and fixed, or just know this isn't the right car to buy. Some other things to look at when you're buying a used car is use the VIN and research the car. Again, do your research. Check the Carfax. If you're buying from a dealership, ask to see it. That'll let you know all the service events that car's had, if it's been in any accidents. If you find a car that's been in several accidents, it may not be a car you want to buy. If you do end up going to private sale, getting Carfax will cost you. That's an extra expense you have to pay for. Check the value on Kelley Blue Book. See if what the dealership is trying to sell that car for is what the car is worth. And call your insurance company to get a quote so that way you know what the insurance cost of this vehicle would be. If you're buying from a dealership, they're going to have it inspected, especially if it's a reputable place like Coons or Bob Bell, for example. Be careful those mom and pop shop type dealerships. While you can get a good deal, they may not have had the car inspected. It could potentially have a branded title. And those are things that can really hurt if you end up buying a car like that. So if you're interested, ask to see that title. And here's why. I mentioned that branded title. If it's a flood vehicle or salvage or manufacturer buyback, those are all things that hurt the value of the car. So you could potentially get sold a vehicle for a lot more than what it's actually worth. First Financial will also not finance any vehicle with a branded title because of its loss in value. If it's a private sale, the title should be clean. No lien holders, no brands. If not, it can get a little tricky. Again, negotiate. I know I've mentioned this before. Knowledge is power. doing your research. I know I'm going to say that a lot, but it really does come down to that. Knowing the price that you're willing to pay for that vehicle and knowing what that car is worth that you're potentially buying allows you to haggle with that price at the dealer. Don't just take their word for it on what they want to sell it to you. They want to sell that car just as much as you want to buy it. Work with them. And don't let the dealership ever push you into something you're not comfortable with. If you don't feel comfortable buying your car, you should not do it. Real big thing here in helping with negotiation is having your financing ready before you go to the dealership. Walking into a dealer and telling them that you have financing lined up and you want to negotiate a price on a car tells the dealership that they have the potential to make a sale, and they'll be a lot more willing to negotiate with you because they know they can make that sale. Never answer how much do you want to pay a month or what's your top dollar to the dealership. Don't answer those questions. Tell them what you want to pay for the car. Let them work to get you happy. And then do you really need to add on everything that the dealership might sell? They're going to try to sell you rust protection, undercarriage coating. Do you need it? So when you get towards the end and closing the deal, really important to look over the purchase order or the bill of sale. Make sure that the dealership hasn't put any hidden costs in that you weren't expecting. So you're going to have the price of your car, and you're going to have the sales tax, the processing fee that I mentioned, your tag and title and lien fees. Those are all required. But look to see what you're being charged for. If anything doesn't add up or you don't know what it is, ask. It doesn't hurt to find out what you're paying for. Know what you're paying for. And also be prepared for any of the last minute items that dealership's going to try to sell you. Your credit, life, and disability, gap insurance, extended warranty, or that rust proofing. First Financial, we offer the gap warranty and those debt protection products. They are valuable services. They really can help you with a vehicle, and we can offer them for fractions of the cost in a dealership. That gap, if the car is totaled and you owe more than what it's worth, you potentially don't have to pay out of pocket to cover the rest of that loan. If you have an unexpected breakdown, that extended warranty could save you thousands. And plus, the debt protection also can help you with unforeseen life events that affect your income, like being involuntarily unemployed, potentially being injured and out of work, or God forbid, even passing away. At the end of the day, we're here to help you. First Financial is here to help walk you through this process and to be your expert. It can be fun and exciting to buy a car, but it can also be very stressful. So working with us will make it the best experience possible. We're your trusted financial partner. We have low interest rates. You can look to get a pre-approval before you begin to shop. Like I mentioned, those competitive warranty options, affordable gap and debt protections, and also that TrueCar partnership, which again, can really help you in finding out what a good price to pay for that vehicle you're looking at is. Some of the resources here just with credit reports. I know a lot of people talk about Credit Karma. Credit Karma is not your actual credit report. While it can be close at times, actually seeing your credit report is your official score that finance companies will look at when you apply for a loan. You're entitled to one free credit report each year. These are the contact information for these, and you can also Google them as well. The numbers are right there. They're general customer service. You're entitled to one free each year if you ever want to see your report. Some other resources just here with First Financial. Like I mentioned, giving one of our expert loan originators a call to walk you through that application. We have our phone number and our general call number. You can check out our Auto Resource Center on our website. A lot of good information there about buying vehicles. And also, again, I mentioned TrueCar, really good place to start if you have no idea what a car should be sold for. TrueCar can at least get you in the ballpark of not overpaying.
All right, Andy, those are all really, really great resources. We did have a couple people come a little later to the presentation, and for those folks, I want to say welcome. And we do have a couple of really good questions. So here's the first one. If I want to make a down payment and get financing at First Financial, do I give the money to First Financial or to the car dealership? How does that actual handoff of the money happen?
So your down payment is going to be what you actually give to the dealership directly. So when you apply for a loan at First Financial, you'd let us know, I'm looking to finance, say, $20,000, and I'm going to be making a $2,000 down payment. So once you actually get to the dealership and negotiate your price, you'd let the dealership know you have some down payment, and then your finance company will be taking care of the rest. You pay that down payment directly to the dealer, but it's reported as one of the items on your purchase order. So you'll actually see if the total amount due is $22,000, subtract out your down payment, $20,000 should be the amount then the finance company would provide the rest for.
That's great. I think that looking over the bill of sale is so important. I remember when I bought my first car, I didn't know that. And we bought a Jeep and there was no spare tire on it. And I said something and the salesperson said, yeah, don't worry about it. And then when we bought the car, there still wasn't a spare tire on it. And because it was not on the bill of sale, they would not give us the spare tire. And that left a really bitter taste in my mouth. I was not very happy about that, but I did learn a lesson.
Really important to look over that purchase order and make sure that what you're being charged for is what you agreed to.
Right. Okay, a couple other questions here. So you talked about model year. Is a model year like a calendar year? Because sometimes we see, in the end of 2020, you see commercials for 2021 vehicles. What is considered the model year?
So the model year is just that automaker's latest update to those vehicles. So a lot of times, the 2021 models would start coming out in 2020. Sometimes dealerships or even automakers wait towards the end of a year to put out their new models, so it actually lines up with the actual calendar year to the new model. But that just comes down to how new the car is. So the 2021 models right now are the latest models that are out. The 2020s are slightly outdated, and that's why sometimes buying a 2020 or a previous model year after the new one has come out can get you a little bit better of a price because the dealership just wants to get rid of that older car. There's no more inventory. They want it gone.
Yeah, that makes sense, especially if you're going to keep that car for a while, right?
Exactly, because you can still get a 2020 vehicle that's brand new, no mile, or just a few miles on it from test drives, even when the 2021s are out, and you can get a really good price on it sometimes.
Okay, here's an interesting question. I live on the Maryland-Pennsylvania line and often buy my vehicles in York because I find I get a better deal. How is that different than buying a vehicle in Maryland, and can I still finance at First Financial?
Yes, there are a few things that always come with when you buy from a different state in which you reside. That's considered an out-of-state purchase. First Financial absolutely can facilitate those transactions. It all comes down to if the dealership that you're buying from will process the Maryland title work. So part of the fees that I discussed at the beginning, the tax, the tag, the title, those are all processing fees to make sure that the state of Maryland gets their cut, the sales tax, and also that First Financial's lien, if we're the lien or providing the financing, is secured on the title of that vehicle before it's actually processed. If a dealership in PA or Delaware or even Virginia, just since we do kind of live within all three states, if they're not willing to process your home state's title work, then that's a riskier transaction for the finance company since no lien is being recorded after you've taken possession of the car. You're usually, as the buyer, responsible to do that yourself. So as long as the dealership will do your home financing, so Maryland resident buying from PA, as long as that dealership will process the title work and the lien, then yes, that's usually never an issue.
Great. Here's another question. I'm getting ready to sell my old car and I can't find my security interest filing. I think, well, they didn't say that. I'm assuming it's the security interest filing, the piece that First Financial sends when the car is paid off. What do I do?
Gotcha. So you can contact, if the loan was with First Financial, you can contact our member services or loan call center department and ask for a new copy of the lien release. Happens all the time. Things get misplaced. We see it plenty of times. As long as the car is paid off, First Financial, if we were the lien holder, First Financial will generate a new lien release to include with your title showing that it is free and clear.
Okay, one last one here, and everyone feel free to put another question in the chat if you have something for Andy. I bought my car and took the financing at the dealership. The interest rate is significantly higher. What can I do now?
Well, you can always refinance. Give us a call, speak with one of our loan originators. As long as you've received the title and the vehicle in the mail from the MBA, you can refinance that car whenever you like. So we absolutely encourage you to give us a call, and we'll see what kind of interest rate we can get you down to and save you some money.
That's fantastic. Thank you so much, Andy. That's great. I think everybody has had the opportunity to ask questions. I do want to share a couple things upcoming before I say thank you again to Andy. A lot of these topics are all connected to each other. So you talked, Andy, today about credit reports and credit scores. We are actually having Wellness First Wednesday presentation in April 7th, about credit scores, what it means, how to get yours, all the things that go into that, which I think is really important when you're doing any kind of borrowing. We also, on March 3rd, are having one of our mortgage underwriters, facilitators, present an episode on mortgages, everything you need to know about mortgages. So I want to thank the lending team for helping us with this effort. And Andy, I really, really want to thank you. You've been just a wealth of information, so clear, concise, informative, easy to understand. And I thank you so much for joining us today.
It's been my pleasure. I really appreciate everyone who tuned in. And like I mentioned before, if you have additional questions or want to start the process in applying for a loan, give us a call. We'd absolutely love to help you out. And I will just say on just two kind of closing notes, two big things to always remember when you're buying a vehicle: knowing what you can afford and doing your research. I know I've said that a lot, but it really does help to do your research in advance, so that way when you make that purchase, it's the best all-around decision you've made.
Absolutely. And along those lines, I did have one last minute question here. With the financing, is more interest charged at the beginning of the loan, like a mortgage, or is it more spread out? And I think the question is the amount of the part of your payment going towards interest the same through the life of the loan?
So the answer to that would be no. At the beginning of your loan, that's when you're going to be paying the most interest, because it's the largest balance on your loan. So the way our interest, now I can't speak on other institutions, but the way First Financial calculates our interest is it's calculated based on the principal balance day to day. So as you pay that loan balance down over time, less and less interest is accruing because the overall balance owed is smaller. So at the very beginning of the loan, yes, the most amount is going to be going to your interest at that time. By the end of the loan, most all of your payments going towards principal.
So the example that our participant cited of the way that a mortgage is processed, it's similar to that.
I would assume so. I mean, I'm not on the entire mortgage side of interest,
Sure.
so I don't want to quote something entirely, but I know just with, and we don't front load our interest. So your first couple payments, or even just like the first 6 months, like I know some companies can potentially do, don't all go to interest. You're constantly paying down your principal and interest at the same time with us.
Sure. And I would encourage our participant to tune in on March 3rd, because we're going to get a lot of information about mortgages from Rob Bateman. So that's going to be awesome. All right. Well, it looks like we're done with our questions and our presentation today. Again, participants, I want to thank you for joining us. I'm going to encourage you to watch the firstfinancial.org website to see upcoming presentations. Again, Andy Gill, thank you so much for being with us today and sharing such important information. And we'll see you next time.